Okay, so here we go. We're going to talk about the OVI, my special unique indicator. So what is the OVI? Well, before I talk to you about what it is, I'm going to tell you that it presents itself as a simple line on a chart. So relax. When it comes to interpreting it, we're going to be interpreting the line, not what goes into the line. So what is it? Well, the OVI is an algorithm that measures the buying and the selling activity in the options market. Now, when big institutions take positions, now what I mean by big institutions is hedge funds and pension funds and life insurance funds, etc. Because of their sheer size, it can take them weeks to build up a position in a stock or to sell a position in a stock because they're trading in terms of millions and millions and millions of dollars, and that means millions of shares as well. Now, sometimes they don't want to be taking quite that long in order to build their positions or in order to sell the positions. So what they do is they accelerate this buying or selling activity in the derivatives markets by way of buying or selling options. And the way they do it is they buy or sell the options in the stocks that they want to own or sell. So far, so good. The OVI measures three basic components that indicate whether or not these big investors are bullish or bearish towards a particular stock. Now, you'll hear me say quite often during this course that the stocks themselves need to be liquid. Now, what I mean by that is that the volume of stock being traded in a particular share needs to be quite high. There needs to be plenty of buying and selling activity each day. There also needs to be plenty of buying and selling activity with the stock options as well. The OVI works best with liquid stocks and options. Now, the fluctuations of the OVI can vary wildly from day to day, so we must only use the OVI in conjunction with, obviously, liquid stocks and options first, but also only in conjunction with chart patterns, tradable chart patterns, where we can make a good entry into a trade. So the OVI measures the flow of the big, smart money. It has nothing to do with price. This is really important. The OVI is completely independent of price action. Now, this distinguishes it from other indicators like moving averages, MACD, RSI, stochastics, Gann, Elliott, Fibonacci. You may have heard of those. Those are the famous price-linked indicators of technical analysis and trading. Now, most of those indicators and most of the indicators that people use lag the market because they involve averages. The OVI does not lag the market, and that's why at times, as you'll see, it can be used as a leading indicator. It can show you the way ahead, but again, only in conjunction with a tradable chart pattern. That's the way that we use it. So let's now have a look at it. So the OVI presents itself in a chart. This is a price chart, so you can see on the top area of the chart, you can see the prices going up and down. Each bar here represents one day. Now, again, the OVI is a proprietary tool not available from anyone else. What we have underneath the chart is volume as normal. I'd like to have this colored, but at the moment we can't do that. Underneath that, we have the OVI. I'll come back to this in depth a bit later. And as you'll see, there's two lines. There's a blue line and a red line, and I'll explain to you about all that in a few minutes. Underneath the OVI, we have a thing called implied volatility. Now, we're not using that expressly to do our style of trading, but implied volatility is a reflection of how cheap or how expensive options are being traded in the market for a particular stock, and we've got a line that depicts that. But more about that another time. For now, what we want to concentrate on is the OVI. So let's look at it in more detail. Now, you see there are two lines. There's the blue line, which is the raw OVI with no smoothing, and then there's the red line, which is a slightly smoothed OVI. You'll also notice that the OVI has a center line, so it has a reading of 0 to +1 and 0 to -1. Now, just using pure logic here and without knowing anything, when the OVI is under the center line, you can generally be expecting there to be a bearish market, and when it's above the center line, you can be generally expecting there to be a bullish market. Let's show you how. So, can you guess the general direction of the market just looking at the OVI? Well, on the left-hand side, you can see that the OVI is generally always below the line, below that center line. So what happens? Well, as it happens, the market is predominantly going down. Now, on the right-hand side of the chart, you can see that the OVI changes direction. It changes to above that center line. And guess what? The market is predominantly moving up. Now, I must emphasize that the OVI has nothing to do with price, and yet, to the left of the chart, as the stock price is going down, the OVI is in negative territory, and yet to the right of the chart, as the stock price goes up, the OVI immediately goes into positive territory in the main. Now, they're independent. The OVI's got nothing to do with price. So what this means is that the buying and selling activity of options changes, literally in this chart, changes the minute the market changed directions. Now that is amazing. It potentially means that someone, somewhere, knew something. So the OVI will broadly be in line with market direction. Yes, it does fluctuate a lot from day to day, but you can see here that as the stock market goes down, this again is the S&P, the OVI is mainly negative, and as it goes up, as the trend changes, this is the major trend changing, it then goes up. It changes personality almost instantly. So we can see clearly that when it comes to the major trends, the options activity in terms of buying and selling options correlates very closely with price action. This is really, really interesting.